Well, as we stand on the precipice of this trade war, many are watching the stock markets closely. They tumbled yesterday, and the volatility has many worried about their investments. Joining us to talk further about this and weathering the financial storm is University of Alberta economist Chetan Dave. Thanks so much for joining us this morning. Seems to be very much in flux, so we're trying our best here. But for people who are at home watching their investments, trying to figure out the best thing to do, what's your advice?
Thanks for having me. Yes, so going forward, I think everybody should expect a lot of policy uncertainty, which means that, what I'm doing for myself, okay, that's how I would sort of put it, is that for long-term savings, like retirement and things like that, I'm obviously holding some sort of a diversified portfolio of stocks from all over the world and different types of fixed income ETFs from around the world, and I'm just not going to play with that. I'm just going to ride out the policy uncertainty in sort of the long term, right? So for long term savings, so retirement savings, things of that nature. In the more nearer term, what I'm doing is probably I'm going to save up a little bit more than I usually do, just for emergencies, basically, and just sort of shore up my emergency fund, if you will. And basically, for speculative investing, I'm just going to hold on to cash until I see a big enough market correction in a diversified global portfolio. So not just the U.S., but all over the world. If there's a steep drop in global ETFs, then I'm probably going to buy a little bit of those in the short term. But that's kind of what I'm doing for myself.
So there's a lot of question marks right now. We do have some precedents because of Donald Trump's first term when the markets did very well. Can we draw anything from that, or is this a whole new ball game?
Well, I think it's a whole new ball game because in the first administration, Trump was constrained by adults in the room, so to speak. So people who were on the economic and financial side, experienced hands, who did a pretty decent job sort of curbing the excesses of Trump's whims. But this time around, he's a lot less constrained. He's surrounded himself with basically people who just say yes to him. And so we can expect a lot more policy uncertainty. We can expect a lot of back and forth. We can, he says it himself. Who knows what's going to happen in the future, right? So now somebody like him can possibly sort of afford to live like that, but most normal people can't. So as far as planning is concerned, I think for long-term investments, you just ride out this uncertainty and possible trade war and all of the chaos, if you will. And in the short term, shore up cash to make sure that you're not in trouble in some way, and then try and take advantage of opportunities.
Now, really quickly before you go, what about those who are possibly retiring soon? Should they be concerned?
Yeah, that's probably the folks that I'm the most concerned about, because I think with this increase in policy uncertainty, we can expect a decline in markets and also a decline in yields. So we're starting to see signs of a little bit of stagflation going on in the U.S. with GDP growth falling and inflation rising, and the extent to which that will translate itself into Canada as well is a function of what happens with this trade war. So it's the folks who are just about to retire that I'm the most worried about. And for them, if I was in that situation, I would just stay in cash.
Okay. Well, it's an extremely volatile time. Chetan Dave, thank you so much for your advice here this morning.
My pleasure. Thanks for having me.